early in my career. I had a front row seat working in tech and finance to the dot-com boom. And so to me, this feels like 1995. At that time, we were just excited that we could get on a message board and message people about some of our hobbies, and send an email. And we could not have imagined what the world was going to look like, forget 30 years later, but 10 years later. So as a result, I think the investment opportunities are just getting started.
Investors, joining us today, we have Marc Lichtenfeld from the Oxford Club. He was on Masters of the Market not too long ago, and he is the chief income strategist over at the Oxford Club. So we're always engaging in a lot of good conversation. And not too long ago, we were talking all about energy outputs that are increasing with AI companies. So I actually wanted to bring Marc back on with us to discuss some of these very opportunities, as we're all in this game for financial freedom, or at least at the end of the day, just to get a better ROI. So Marc, welcome back onto the channel. I want to go ahead and just kind of ask you, of course, I want to go ahead and just toss over this question for you. When it comes to energy outputs and AI, what do you see in the mix for us? How can we really capitalize on a lot of this growth opportunities that are coming about?
Yeah, so I'm focused on two areas in energy. One is kind of short to intermediate term. The other is intermediate to long term. On the more short term side is natural gas. Natural gas is plentiful, especially here in the United States. And it's cheap, it's clean, and it's available right now. And I believe that's what's going to really help fuel AI and just the overwhelming demand for energy and electricity that we have for a lot of factors. I mean, strip out AI just for a second here, the economy is doing quite well. So a strong economy is going to require more energy. Then you layer on crypto with Bitcoin trading around $100,000. That creates a lot more interest for crypto. We know crypto needs a lot of energy, especially in mining. And then you add on AI, which is, a whole nother ball game. And we know just how much energy is required from AI. You may have heard this stat before that a simple chat GPT query requires 10 to 25 times as much energy as a Google search. And now when you do a Google search, you get an AI result as well. So and that's just a simple person asking a simple question. So imagine all the complex uses of AI, whether it's in biotech or physics or you name it. AI is exploding. It's only getting more powerful. It's improving. So this is taking off on an exponential level, and the requirements for energy are unreal. I mean, Elon Musk has said the next big shortage in the United States is going to be electricity. Donald Trump has said we need double the amount of electricity that we have now to power AI. So this is a very significant near-term need, and we have various energy sources, but natural gas is the cheapest. It's clean, or at least cleaner than oil and coal, and it's plentiful. It is now going to be exported in greater amounts to Europe, and we know that Europe has been relying on Russian natural gas. That's not, I think they're not going to be playing that game anymore. We just saw the German government fall as a result of energy prices going through the roof because of Russian natural gas. So I think this dependence on American natural gas is both in the United States and abroad is going to be a very big thing and really lift up the entire industry. Now, so that's my short to intermediate term solution. Intermediate to long term is nuclear, because that is the cheapest, most reliable and cleanest of the fuels, other than, of course, renewable energy, which has not quite scaled, and at the moment is certainly not capable of doing what nuclear energy will be able to do. And nuclear energy is booming all over the globe. It's right now there are 440 nuclear power plants around the world. I believe there's another 110 that are planned or under construction. So that is growing. We're refiring up old nuclear plants like 3 Mile Island. You've got Microsoft and Amazon that are building their own or contracting out to have their own nuclear plants and these small modular reactors called SMRs, and those are going to start popping up. So nuclear is really going to be the wave of the future. And shockingly, it's something that politically the Democrats and Republicans are all in agreement about. I mean, as I like to say, Democrats and Republicans can't agree that water is wet, but they are on board that nuclear power is going to be necessary to fuel the energy needs for not just for AI, but for all of our energy needs. So I think nuclear is a really, really exciting long-term play.
I was going to say, when both sides of the aisle are agreeing, there's something there. I want to ask Mark, like AI has been with us, I don't know, give or take like a year plus, and there's obviously been a lot of, I want to say, amplification in the markets and investors just going crazy about AI. Did we maybe miss the boat on a lot of opportunities, or you really do believe right now there's still plenty of opportunities for us to get in?
Oh, very much so. So I'm a little bit older than you, so I have a very clear memory of the dot-com boom. I was early in my career. I had a front row seat in San Francisco working in tech and finance to the dot-com boom. And so to me, this feels like 1995. If you use the analogy of the dot-com boom, meaning that 1995, I was just getting on to AOL or CompuServe, which some of your viewers may remember. I'm not sure, but at that time we were just excited that we could get on a message board and message people about some of our hobbies. And send an email. I mean, that's really what it was like. We had dial up, and we could not have imagined what the world was going to look like. Forget 30 years later, but 10 years later, just trading and doing banking online and all those things. I couldn't have imagined that in 1995, and I was there, like I said, in the front row, in the Bay Area. So I think that's where we are right now with AI. Right now we're just starting to see some of its capabilities. Where it's going to be even 5 years from now, I feel like I can't even fathom. And so as a result, I think the investment opportunities are just getting started. Obviously, there's a lot of hype about it right now, and there's going to be a lot of trash, just like there was in the dot-com boom. But this is a very big, I don't want to even see technological advance. This is a game changer for our world, just the way the internet was 30 years ago.
So I feel like across the board, like a lot of companies, even in my own research, right, it's like everyone's implementing AI somehow, some way, and there's plenty of opportunities there. Like you start to look at some of the big players, right, like Google just comes right off the top of my mind. But you're talking about even looking specifically now into the energy sector because of these outputs. How, like, a lot of my viewers, right, are income investors, dividend oriented. Are these safe enough opportunities? I'll put like quotations for safe, but like good enough opportunities for the income investor?
That's a great question. So there are a few ways to play it. If you are trying to hit that home run and find that next great AI stock, well, good luck. I hope you succeed. It's not necessarily easy. Again, going back to my experience with the dot-com boom, back then Amazon was, starting off as a bookseller. I'm not sure how many people really believed it was going to become the behemoth that it became. For every Amazon, there was a pets.com. There were a lot of companies that went under. So you could get lucky and find the next big AI home run. I think I think really what it would be is luck at that point. So the great lesson that I learned from the dot-com boom was not to try to find those stocks that are basically the lottery ticket winners. It's to find the companies that provide all the tools and resources for the entire industry. You may have heard the term picks and shovels before, and that reverts back to the gold mining days where, yeah, maybe somebody found a nugget in the river, but the people who made money were the ones that sold them the picks and the shovels. That's who really got rich during the gold boom in the 1800s. Same thing with the dot-coms. Yes, there was an Amazon, but for every Amazon, there were 10 pets.coms, and the companies that made a fortune were the Ciscos, the Oracles, and the companies that provided all those tools. So that's what I'm interested in the AI space, and especially as an income investor, because these companies are mature. They've been in existence for years, and many of them have been paying dividends for a while. So in the energy space, like I was talking about with natural gas, a pipeline company like Enterprise Products Partners, this is not a direct AI play, but AI requires a tremendous amount of energy. That energy has to get to the grid, and Enterprise Products Partners is a pipeline company. It transports natural gas to the grid and pays about a 7% dividend. It's been growing the dividend every year for about 25 years. So to me, that's kind of like a no-brainer. Then you also have the data center REITs, AI requirements for servers, are enormous, as well as all businesses, whether it's specific to AI or not. All the major companies in the country and around the world are farming out their data storage to data center REITs because these companies have the expertise in how to set up the servers, how to cool them, how to protect them with security. So it's just easier to pay somebody to do it than set up giant warehouses. So the data centers also, I think, is another great way of playing the AI space with a company that's providing the tools necessary to run AI and to grow AI.
Are we almost fooling ourselves in trying to find that needle in the haystack and just going after, the mainstream stocks that a lot of people are even boasting about on social media? We should really just be focused on the resource players as opposed to like the one-offs.
Yeah, I mean, I think, look, if you want to take a big swing with a small amount of money, I don't have a problem with that. That's one of the things that keeps us interested in stocks sometimes, is going for that home run. But for your serious money, for your non-speculative money, then I think it should be in companies that are more established, that are not lottery tickets, that are succeeded before AI and are going to continue to provide all the AI companies and businesses with the tools that they need. So I am definitely more in favor of those types of companies because this business model has proven itself. This picks and shovels idea has proven itself over so many different industries. It's not just technology. I mean, like I said, going back to the 1800s, if you can provide successful businesses with the tools they need, you'll make money. You don't have to be the end user or the company that's providing the end user with the technology or the product. Provide those companies. Be the company that sells to those companies, then you'll do extraordinarily well.
Mark, can you provide a couple of names, or at least some of the names you're looking at right now? Because I know for everybody out there, I'm going to drop a link in my pinned comment and description, more insights from Mark and his team. While he's here with us right now, I'm curious to know what are some of like the top names, or even the industries we should really be focused on as income-driven investors for dividends, for passive income, or just overall safety. And on that same note, just because I have a fair amount of viewers who are actually nearing retirement, is it safe for these players as well?
Sure. So I mentioned Enterprise Products Partners. You're not supposed to have favorite stocks, but this is one of my favorites for some of the reasons I mentioned before. Almost a 7% yield, dividend growth going back 24, 25 years. Just a steady business, not very capital intensive. It's a pipeline company. Also in the United States, that dividend is tax deferred because it's a master limited partnership. So you don't pay taxes on the distribution when you receive it. Instead, it lowers your capital gain. It lowers your cost basis, which increases your capital gain. So you'll eventually have to pay the tax. I mean, Uncle Sam's going to get his money one way or the other, but it'll be much later when you sell the stock. So that's really attractive. Another company in the natural gas space I really like is Cheniere Energy Partners. So not Cheniere Energy. This is Cheniere Energy Partners, also a master limited partnership. And the reason is Cheniere Energy has a dividend yield, I think it's now below 2%. Cheniere Energy Partners dividend the yield is up over 6%. It's a much higher yield, and it's a much more specialized business. It has the largest natural gas terminal in the United States in Louisiana. It also has marine berths. So as I mentioned, we're starting to export natural gas. It's a pipeline company as well. So it's storage, it's transportation, a lot of things. And again, it has that nice tax-deferred yield. So those are my natural gas plays. And in nuclear energy, I really like just having a position in uranium, just in physical uranium. So there's the Sprott Physical Uranium ETF. Ticker symbol is SRUUF. And I think that's a great long-term play. Uranium has come down quite a bit in the last couple of weeks. Look, it's commodity, it's going to be volatile, but I think as a long-term play, we need uranium for all these new nuclear power projects, and there's not a lot of places to get it. I mean, Russia is one of the big markets for it, or not markets, but sources for it. The countries that have it are not all our best friends, so there's a a restriction in supply naturally out there, and I think the price for uranium is going to go a lot higher over the years.
This may sound like a bit of a silly question, but I want to have, just because of your position as the chief income strategist, let's say some of us are reorienting now our portfolios. We're hearing this news. I mean, of course, AI is the next big thing here for us, I think, for a long while, at least until the next big thing comes out. But how do we reorient our portfolios to tailor to the energy sector and AI and kind of just overall for the future here? Do we start trimming down our portfolios and reallocating? Do we just add to our portfolios already?
Great question. So, I wouldn't do anything too radically different. If you have a well-diversified portfolio, you always want to be in a variety of sectors because there's always going to be something that's winning and losing. Energy, it's based on a commodity. So if energy prices fall, typically those companies, those oil and gas companies, they'll fall as well. Even with the transportation companies like an Enterprise Products Partners, the price of the commodity doesn't impact their business as much, but it does impact their stock. So it is something to be aware of. So even though I'm quite bullish on energy and the commodities behind energy long term, there's certainly going to be volatility here and there depending on a whole variety of factors. I don't think you want to get so overweight energy that it is a major part of your portfolio, even though we think the long-term prospects are very strong. You want to be well diversified. If you want to be overweight energy a little bit, I don't have a problem with that. I have been swinging the Oxford Income Letters portfolio to be a little bit more heavily weighted energy, but I'm not going nuts because we still want to be exposed to technology and retail and finance and all the other sectors that make up the economy, because there's always going to be something working, something that's not working, and we want to make sure we have our bets spread pretty well so that no matter what's happening in the economy, we have something that's doing well, that's growing their business, growing their cash flow, and growing their dividends.
Sure. So talking about a pretty nice spread, would it be worth it in our case to go with, say, a sector-specific ETF that covers, the broad sector worth of energy? Or would you prefer us actually just looking at individual stocks that are big players in the space, focus on them, double down on them, and maybe then, as your base, just have the S&P and then go for these individual players?
Yeah, I'm much more of an advocate for individual stocks because the ETFs, first of all, very few of the ETFs have any kind of real dividend yield. And if they do, it's often very manufactured, whether it's through options or something else, and those are typically not safe. So if you see an ETF with a very high yield, it's usually not safe. It's also, they usually don't grow the dividends consistently. So even some of those ETFs that focus on dividend growers, like dividend aristocrats, those dividends don't necessarily increase every single year. They fluctuate a bit. So, I like that consistency of a company that's just raising their dividend every single year, no matter what. And the other thing, too, is I like to have a little bit more control. Some of the ETFs or funds can be very heavily weighted in certain stocks. So I would rather make those decisions myself rather than trust it to an index or even an active manager, which, as we know, typically underperform the market. So I'd rather own the individual stocks, pick those companies that have the growing cash flow and raise the dividend every single year. So I'm not a big fan of the ETFs unless they can serve a very specific purpose, like the physical uranium ETF that I mentioned, or there can be some other exceptions, but generally speaking, I really like individual stocks over ETFs.
Sure, and wrapping into some macros, because we just had an interest rate cut, then the Fed had pushed back, and saying that they're going to stall some more rate cuts deeper into 2025. Of course, Trump is coming back into the Oval Office. A lot of things are happening, geopolitically speaking, even still today. So we should expect volatility from what I heard from you earlier, but it's not necessarily related to all of those events. It's more so just where we're at in the industry, AI and advancements. What should we have, at least if we're adding to our portfolios energy stocks, AI stocks, what should we be aware of as some green flags and red flags to say, okay, I see Mark said that was probably going to happen. I should just stay calm, don't freak out, don't panic. Can you give us any insights?
Yeah, well, I think interest rates are likely headed higher. And the market clearly showed that after the Fed rate cut, interest rates spiked immediately. So at least in the very short term, the market, is not buying what the Fed is selling and believes that inflation is going to return. It proves that why dividends and dividend growth is so important, because when we do have these periods of high inflation, you need your income to keep pace with that and to maintain your buying power. For years when we had inflation that was well below 2%, yeah, everybody wants to make more money, certainly, and you want to generate income, but it wasn't as vital. It wasn't as important. Whereas now, if inflation does start to climb, and if it sticks a little bit, I mean, when we had the inflation spike after COVID, it stuck around certainly, but inflation did come back down. If this is a little stickier, then you really need to know that your income is keeping pace with inflation, because the worst thing that can happen is you're generating income, but your buying power is still declining. So that's one of the things I love about the dividend growth strategy. And it's funny because when I wrote my book, the first edition of Get Rich with Dividends came out in 2012, and inflation was almost non-existent, and it stayed non-existent for years. Kind of kept hammering that message, hey, grow your buying power, grow your buying power. It's going to matter someday when inflation picks up, and it certainly did after COVID. But I think now it really could stick around for a little while, because we do have a strong economy. We have all the productivity and all the investment in AI and new technology, in new energy like nuclear. So I think there's going to be a lot of money sloshing around the system. Tax cuts are coming. And then some of President-elect Trump's policies could be very inflationary, with tariffs, deportations. So there's a lot of things out there that could really spike inflation, and you're going to need that dividend growth to keep up with that. You just can't bank on hoping to get some capital gains and picking the big winners. Having these companies that are steadily churning out income for you is what's going to keep you afloat. If you use that income to pay your bills, for sure.
So I was going to say, correct me if I'm wrong, energy stocks and the energy sector in and of itself is usually a safer bet regardless.
Sure. Yeah, I mean, it's a product that we all need. It's not going away. It's not like a McDonald's that you can cut that out of your life if you come on hard times. So yeah, energy is certainly a bit of a defensive play. In a recession, we'll use less energy, and so those prices may fluctuate a little bit. And like I said, it is tied to a commodity. So if you owned an Exxon or a Chevron and oil prices plummet, the stock's going to drop too. But long-term, big picture, yeah, it's a defensive play. We all need energy, and we're going to need more of it.
So Mark, let us in now. Again, investors, the link is down there in my description and pinned comment. But Mark, just share with us briefly. We go click on that link right now. Where does it take us? What are we going to get? Why should we click on it?
Yeah, so there'll be a lot more of my research, especially about nuclear energy and where it's going, why it is so imperative that these projects get started, get completed, because that's, like I said, so many of them have broken ground already. I mean, Bill Gates just spent, I forgot the amount now, but he just spent a fortune on a new reactor in Wyoming. So there's a lot of money going into this sector, and like I said, the long term, this is I think going to be one of the really big stories. I think 10 years from now, we're going to look back, and there's going to have been this nuclear energy, this new nuclear energy era, and to me, it's one of the ways you can play it for income. One of the ways that you can play it's going to be a little bit safer than speculating in some other areas. And to me, it's almost low-hanging fruit. I mean, like I said, we know the Democrats and Republicans are both on board. We know it solves a problem that is a very significant problem that we have right now. And I think it's only going to get exacerbated. I mean, if we have some major blackouts in the U.S. this year or anywhere around the world, I think it's really going to emphasize the critical need for energy and to boost the electric grid. and nuclear power is absolutely the solution for that.
So investors, Marc Lichtenfeld from the Oxford Club, the chief income strategist here on with us. Go ahead and click that link down there in the description and pin comment for all of Marc's insights. And Marc, anytime you want to pop back on here with all of us, you're always a friend to the community. So once again, I want to say thank you to you, and we'll be jumping into your research.
Oh, my pleasure. It's always great to talk to you, Ari. Thanks for having me.